and we are seeing oil prices come off again this morning, kicking off the week where they left off last week after the significant drop on Friday. Now WTI trading below 80 and Brent at 85. Let's kick off this morning with Omar Najia, Global Head of Derivatives, BB Energy. Omar, it's starting to feel like a Black Monday. I wasn't paying too much attention in 1987, but it certainly feels like the stars are lining up, in particular the UK's place sort of is hitting a significant moment. But I wanted to get your initial thoughts this morning on how big an impact the bionic dollar is having on the direction of everything.
No, so it's not the bionic dollar at all, right? So, things are relative. Right. So it's not that you can hold, if you want to hold fiat currency, that you can hold, I don't know, some kind of made up one. So you either hold dollars or euros or GBP or a combination or the yen or whatever it is. Right. So as soon as this new chancellor made his speech, the market on GBP dove. I mean, it dove, hit rock bottom and then started digging, and it's going to continue to do so. The reason is quite simple. The solution to every single problem that the UK has had, and the Western economy, but the UK has had since 2000, has been more debt, more printing of money, if you like, more debt, more borrowing, and it's just going to keep on going, and this will eventually have to be paid for. So we were looking for parity between the US dollar and the GBP. And when I said that, when it was back at 135, everybody scoffed, right? So we're going to get there. I said parity on US dollar euro, and it's gotten there. And I think now we get to like 95 cents, and I'm sure we'll hit that very soon. And so again, we were saying that, equities are going to crater. Everybody else was telling me, no, the West is winning, and, it's all, and what's happened? The equity markets have cratered. And don't make, in my opinion, and I could obviously be wrong, but in my opinion, don't make the mistake of thinking that this is the end. This is not even the beginning. Winter hasn't come yet, and we already have a crisis of ginormous magnitude. This is going to be so catastrophically bad, and people will still put their head in the sand and say, it's going to be okay, everything's fine. By the time the snow melts come, January, February, it's going to be a totally different landscape. I think you're going to see decimation in the equity markets, same in terms of the housing markets, same in terms of the credit markets. And it's not because of any kind of magic. It's because people believe that you can just print money for decades and everything will be okay. And you'll never have inflation. And they believe that if inflation is at 20%, you can raise rates to 2% and everything will be okay. The definition of delusional. And I hear everybody say the same thing. It's going to be okay. The market is actually betting that by 2023, rates are going to come back down, or if you like, inflation is going to come back down to 3%. So you can see where there's a massive dislocation between what the market is pricing and what some people think the market should be pricing. So that dislocation is ginormous. And there you go. That's where you'll see equities move. That's where you'll see oil move, because no market is an island, right? So it's like saying that, you get on a plane and God says to you, 90% you're not going to crash. God says to you, 90% you're going to be okay. You get on the plane and it starts to frigging dive and dive and dive. And you know that God said 90% is going to be okay. But what do? You freak out. You go nuts. That is trading, right? The 90% is good. You're going to be okay. You're going to be okay. But people don't behave that way. People will freak out anyway. So I think that basically that's what we'll see.
Let's go to Narendra Taneja, India's leading energy expert. Narendra, are they freaking out in India with the rupee at 85 to the dollar, and you're importing 5-6 million barrels of oil a day priced in dollars? How significant, from your perspective, is the dollar strength at the moment?
Well, it's of course terribly bad news for India's, overall economic growth and balance of payments and rupee dollar value and everything. In fact, our central bank has spent $100 billion the last few weeks just to strike the right balance between the price of dollar and price of rupee, so that imports, especially of oil, the negative impact can be minimized. But it is not a great success so far. So what we have seen, for instance, the last 24 hours is terribly bad news, especially for big importers like India. But that said, at the same time, are the people freaking out? No, not yet. Are there kind of a lot of worry? Yes, worried, but not freaking out yet. And at the same time, exploring that if we could, for instance, bring oil from some other economies where dollar is irrelevant, or for instance, to kind of, do things so that we can reduce our dependence. But my own analysis is that, probably is going to hit India very hard if the dollar continues to behave the way it's behaving, because we don't have too many alternatives. We have tried Russian oil, but in fact, the size of Russian import is beginning to go down. Russia has almost stopped exporting LNG to India. Last 2 months, we have not actually received a single parcel of LNG. So there are worries over there. And in fact, Russia has defaulted on this. So that's also being raised at the highest level between Moscow and New Delhi. And oil also, a couple of companies have tried in the last couple of weeks and with no success in terms of discount. And Russia is talking about shortage of tankers, difficulties in terms of insurance and so on and so forth. And the also fact is when we bring oil from the Gulf, it takes just 3 to 4 days. From Russia, it takes 1 month. So overall economics doesn't really work out very well. So we have done very well in terms of, kind of handling the impact of rising cost of dollar and by importing more Russian oil. But it seems that the challenges now in front of us, especially when it comes to the winter, are going to be greater. And the economics somehow is going to be extremely, extremely challenging. So overall, when you look from New Delhi, what's going on, the landscape is very, very, very same. And my own sense is, unless and until, of course, the West, mainly the United States and Russia, they sit across the negotiating table trying to find a solution for Ukraine, I think things are only going to get worse. And this winter, it may happen in Europe, because we don't get that kind of winter in our part of the world, except in the mountains, Himalayas. But I think this winter is going to be extremely challenging for Europe and therefore for economies like India.
Henning Glosteen, Director, Energy, Climate and Resources, Eurasia Group. Welcome back, Henning. I wonder from your perspective whether this Ukraine crisis, this Russia's war in Ukraine, has now morphed into a financial, possibly more than a crisis, or is this still ultimately a geopolitical crisis that has the potential of resolution, as Narendra is pointing there to what is needed?
Thanks. Well, for sure. Mainly it is still a really, really brutal war on the ground, and people in Ukraine are the main people who are suffering. This is worth keeping in mind. But this is now an economic war as well between Russia and the broader West, being fought out mostly on the economic side over the EU, because as you pointed out, this is a crisis now. It's not just a winter power and gas supply crisis, which it will also probably become, or with a high degree of risk at least. But it is also almost certainly going to be a recession. I suspect we're probably already in a recession. So, and that will, as we've just already heard, this will affect equity. This will affect the currencies, which already is. It'll hit oil consumption. So this is this has morphed into an international economic crisis and conflict as well. And as Narendra just rightly pointed out, yes, for sure, this is immediately hitting Europe, but because the EU is such a big trading block, it'll hit markets around the world, and of course the global sanctions have an impact as well. So yeah, this is not just a localized conflict anymore.
Omar, in terms of where the where you look to for what is direct, what is causing the direction of travel of the financial markets as they are falling. I mean, oil is still in historical terms at a fairly healthy price. And if you offered OPEC plus 5 years at $85 on Brent, they'd bite your hand off, right? It's still a very chunky number. What is, you think, the overarching direction of travel? Is it too much the liquidity of the last 10 years, money supply? What do you see is forcing this direction of travel, equity markets imploding and so forth? And hence then what would correct it the other direction, what will or won't? Because inevitably it's not just the West that is suffering, quote unquote, but of course across Asia, China is having very difficult period of time. Obviously India, as Narendra has just pointed out, nobody is outside of this consequence.
No, I disagree fundamentally on a lot of stuff that you say. But let me just try and explain. So the Western, let's call it, you can call it hegemony, or you can call it leadership, or whatever you want, right? The golden billion, basically. That has gone. I've been trying to explain for a very long time now that the world has changed. It's no good denying it or trying to live in the past. It's gone. It's finished. So what was, let's say, the EU? What was the German economy built on? The German economy was built on buying cheap gas and turning it into other stuff. They had leverage of 100 to 1. So they used to pay $20 billion for Russian gas, and they used to turn it into $2 trillion of output. That is gone forever. It's not coming back next week. It's not coming back when they sit down at the negotiating table. It's finished. So let's look at what happened. So the EU economy could be great and whatever, and yeah, cradle of democracy, and don't worry so much about Libya and all this kind of stuff. But bottom line is, they will be uncompetitive. Why? Because energy prices are the highest in the world. Everything depends on energy, manufacturing, services, you name it. So what we know is that the EU economy will be the most uncompetitive on the face of the earth. What happens? It shrinks. It could shrink to this big, or like a dot, or this big. But what we know for sure is that it's going to shrink, which means its dominance on the world stage will disappear. Same thing with the US. Now think about it as basically water flowing. So it's going out of here and it's going somewhere else. That somewhere else is the stuff that you say is in terrible trouble, and is like China, the Far East, emerging markets, all that kind of stuff, right? It just doesn't disappear and whatever, it rebalances. So what you're going to see basically is a realignment. So standards of living in the West are going to go down. Standards of living in the East and emerging markets are going to go up. That's just a fact. So we can do whatever.
You're saying nothing new there, really, Omar. I mean, that's been the case for 30 years, 20 years. This is not a new narrative. It might be an accelerated narrative in the current window of time, but ultimately it's not new. And of course, as Narendra has just said, India is not immune to the consequence of pain in an economic downturn cycle. The currencies in India are at a level that is substantial, as it is right across Asia. So it's not an either or equation. One win, one loses. I mean, both are clearly losing.
No, it's a terminal thing. You still don't want to kind of, understand or accept. What I'm talking about is something different. What I'm talking about is not a slow move of capital. What I'm talking about is the death. The kind of the death of the European economy, nothing less. And what you're going to see on the markets trade real money, real value. That value is disappearing out of equity markets. Question is why? If it's been going on for 30 years and all the rest of it, blah, 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 why is it that right now markets are panicking and diving? Why is it that we have interest rates?
There is a relativity of these things because the equity markets have gone bionic since, whatever time and you want to take 3 years from now. They still haven't even remotely given up the gains of the last 3 years. Let's go to Narendra and let him get in on the conversation. Your thoughts, Narendra, on the thesis, and I'm still struggling to what it is, that the West is going to die, but I'm not quite understanding. He didn't answer the question. What is driving the direction of travel, and then what would turn it around? What would give you a weaker dollar that would in order to make energy less expensive and not jeopardize the Asian economies?
The West is certainly not dying. In fact, we are going to see, West doing pretty well, and it's very important for economies like India, Australia, Indonesia, even Vietnam and Japan and Korea. For the West to do well. We are so integrated. We are all democracies. And I think, we want democracies to come even closer and work, for some kind of global energy security mechanism, a new one, a restructured one, but that's what we want. And India will be hosting G20 summit next year, and that's right on the top of the agenda. But that said, at the same time, I think what's happening right now, that you see a bit of panic in Europe. I was there just a few days ago, and what I gathered was kind of Europe kind of slipping into fortress kind of mentality, in the sense that what they're trying to do is to build a kind of energy fortress for Europe, together with Canada and the United States. We have seen German Chancellor first traveling to Canada and trying to build this fortress. He's in the Gulf now, trying to build again the same kind of fortress. And, so they're building a kind of fortress in terms of making sure that Europe has sufficient and affordable energy available in order to continue in the direction of, growth. But that said, it's not going to be that easy. My own sense is Germany wants some kind of solution over Ukraine ASAP. France probably wants the same. Poland has a different idea. The United States certainly is more focused on President Putin than Ukraine. And that's the unfortunate part of the story. But my sense is that, that soon this winter is going to teach politicians who are only focused on politics and not on the welfare of the ordinary people, especially energy welfare. The people are going to force their politicians this winter, when people might out be even in the street, protest and tell the politicians to behave and sit across the table, find a solution for the people of Ukraine. And in the process, oil and gas and coal, energy as a whole, natural resources might benefit. I'm not that pessimist. Let's not forget one thing. It's not so much about Russia. It's more about President Putin and his regime. And at the same time, I think it's important that in Europe, they don't want Russia to slip into the tight grip, the dragon grip of China. Nobody wants that to happen in Europe. And at the same time, not forget, only yesterday, some European countries, many in Europe, Italy and Germany, they were talking of bringing Russia into EU. Imagine if Russia comes into EU, the kind of economic powerhouse it will create. And Germany for a long time was treating Russian oil and gas as domestic oil and gas. Italy was doing the same. France was doing more or less the same. Now, the question is that these things evolve over a period of 20, 30 years. And if you think that that will change overnight, they will suddenly dump Russia. They will completely paint Russia negative. Russian oil and gas will become absolutely untouchable forever to come. I don't think it's that simple. What we are witnessing in the process is that we are going back to the like of 1980s, where the world looked more divided, more looked like in compartments. So we're going to see that. But I think this winter is going to decide whether politicians who want the compartmentalization, fortress for Europe, minus Russia, or those who want basically the story that has been evolving the last 20 years should continue, because that helps Russia to stay away from China and also to integrate more the western part of the world. Now, this winter is going to make it clear, and I don't think politicians are going to decide it. If winter gets tough, people are going to hit the street and teach their politicians a lesson across Europe.
Henning, on that point of teaching lessons across Europe, of course, we have the results of the Italian election now this morning, a clear victory for the right coalition. Still not a majority, it has to be said, 45%, but nonetheless, given the architecture of the political system, they get a majority in parliament. What do you think the significance of that is, given all of these issues and the direction of travel for Europe through winter and sort of that coalition against Putin and Russia?
So, I mean, this sadly has been a long time coming in Italy. We will probably see a unstable far-right government in Italy now. This has a destabilizing effect on the entire EU, sadly. And of course comes, as we've now heard in great detail, at a moment of great crisis. It's an economic crisis. It is also indeed a debt crisis now, and it will become more so. And it is an energy crisis, and it is a geopolitical crisis. So there's a lot of crisis here, and this is why markets are in such a bad situation. There's one or two aspects to be aware of, though. Meloni, so who will probably be the next Prime Minister of Italy, is fiercely pro-NATO. This is a bit of a breakout of usual far-right politics in the EU, where there is a trend of some sympathy towards Russia and Putin in particular, but this is not the case with Meloni. The biggest source of crisis here is probably over the euro and collaboration within Europe, because Meloni also is really not very friendly towards Germany. So this is an internal EU conflict risk that might flare up again between Rome and Berlin. That is my main worst. And then, of course, it's a debt situation again, because the most indebted country in the EU is indeed Italy. And the only way out of this mess so far being addressed by most politicians in the EU is indeed to either bail out or support industries. And a lot of this will be debt financed. And the question is, who pays for it?
Let's go to the survey question and see where the view of the room is on the biggest factor driving the direction of oil price. Dollar strength, recession, Ukraine war, none of the above. What is the biggest factor driving the direction of oil price this morning, Monday morning, this week? Which of these do you think is holding it? Omar, Monday morning again, oil prices coming off. There was a sense of them holding early last week. This week, not. Where do you think we're going vis-a-vis? Is there any technical floors there that can keep, are you a buyer soon, or where do you stand? Sorry, you're on mute.
So the more I hear that, it's all a, blip and everything will be okay, and they all sit around the table and all this kind of stuff, the more negative I get, basically. So equity markets, forget it. Credit markets, forget it. Maybe you see a bounce on oil, but longer term, forget it. Once everybody on here is saying, this is the end, and we got to sell everything, and I can't believe it'll be time to buy. But for now, I see everybody's like, all is well, and it's been like this for 30 years, and we carry on and all this kind of stuff. So bearish.
Narendra, your thoughts on the outlook for the immediate in the sense of India, and if you might give us some insights on your views coming out of the meeting in Uzbekistan, just to understand a little bit of where India now sits vis-a-vis the relationship with Russia, vis-a-vis the war in Ukraine. It seemed coming out of the Uzbekistan that there was some sense that India was putting a little bit of distance, or more distance than maybe was previously. Generally, could you give us an insight of where you think that relationship is at the moment?
Well, I think, this SCO meeting in Samarkand was very, very significant, because India, on the one hand, Russia is a very important friend, and so are some other members of the SCO organization. But at the same time, India's kind of overall, now senses that Ukraine is going on for too long, and Russia basically, need to sit across the table. And that was said publicly by the Indian Prime Minister. It has been interpreted as a major shift in terms of India's stand on the whole issue. But I don't think it's a major shift. That has been more or less the stand from the very beginning. Was being communicated to Moscow in private, and now it has been done in public, because India's economy, overall relations with other countries are being negatively impacted. So therefore, India thought that it's important to say this, what they've been saying in public. And as I said, that in terms of the way we look at Russia, for us, European Union, the United States, and OECD countries are very, very important partner, mainly because they are natural partners. They're democracies. So any democratic, for us, but it gets very easy for us to deal with them. So the entire, call it Western Bloc, call it Europe, America, by any name, they are democracy. Therefore, we feel closer to them. And at the same time, we know the real threat is China. And these Western democracies, Europe and America, Canada, Australia, and then Japan, these OECD countries are kind of our natural friends. And we are working together in terms of Indo-Pacific. We have got platforms like Quad in order to make sure that Asia of tomorrow is not kind of dominated by any one country. And it's a kind of multipolar region, because that's very, very important. So in this, all that alignment, we find on the one hand, we are very close to the West. And when we look at Indo-Pacific, in particular, the globe and the new emerging world order, we find that, look, we are kind of natural partners with the Western democracies of the world. But at the same time, we are very worried about Russia going weak due to this war and in the process slipping into the tight embrace of China. That's very, very uncomfortable position for us, because we share a long border. We don't have a very comfortable history with China. And it's also a worry for Japan, for Korea, for Australia, for ASEAN, for Vietnam, not only India, and the United States. So I think we need to strike the right balance. We are not talking only geopolitics, it includes energy, economy as a whole. We therefore don't want Europe and the United States to get completely bogged down in Ukraine, and Ukraine becomes a new Afghanistan next to Germany and next to Italy and all that, and for the United States also, because if that happens, they'll get bogged down there for years to come. And then China will be the biggest gainer. We don't want that to happen. We want Russia and America, the NATO, to find a solution in Ukraine. And and Russia has committed some mistake. It's important to sit across the table, find a way forward. We hope they do. And if they don't, it's going to be catastrophic for not only Europe, for the whole world, including China and including India, all economies. So therefore, our focus is Russia is a friend, and we are telling Russia what is right. And at the same time, we are continuing to buy, oil from them. But we don't know about tomorrow. Oil is nothing to do with our love for Russia. There is no love for any country. We love only India. It's all about economics. If economics works, we will continue to buy. But it looks like there is a shortage of tankers. Insurance companies are saying no. The voyage time is longer, 30 days. So there are many other issues. So we're going to look at, when it comes to Russian oil, purely on economic basis, absolutely no emotions there. And we, at the same time, if we find better deals from the Gulf countries in the process, we'll of course do Gulf, because we know Gulf better than any other country. So it's very, very complex. So this winter, the complete last line, this winter is going to be very important. We are keeping a close eye on this winter, and we are watching it not on daily basis, practically on second to second.
Henning, let's just get the survey result and talk a little bit. Obviously, you were previously based in China. Your sense of that question that Narendra points towards, the idea of Russia and China becoming closer in this crisis and becoming embedded, if you like. Your thought of that relationship announced in early February, still present. Where do you think that goes at this time? Are they natural bedfellows? Not a bigger picture view on that?
I was based in Singapore, not China, but right. I spent a fair bit of time in China as well pre-COVID. But China will take this opportunity opportunistically. It'll access cheap Russian hydrocarbons and other raw materials at its own deals and bargains, because China will drive a hard bargain to Russia, because China knows that Russia has lost a lot of its customers, so they will price this on their terms. And I think Moscow will find this is going to be a very hard deal. But of course, China will take the opportunity to do this, and Russia will do this as well. I'm fairly certain. But you could also see from last week, you mentioned Uzbekistan, the meeting there, that China pretty much made Putin say something and say that that Russia acknowledges the concerns China has about the impact of Russia's war in Ukraine on the world economy, i.e. also on China. And I do not think China will repeat Europe's mistake in building a total dependency on Russian supply that A, it sees the reliability issues. B, China has pretty much the same climate goals as the European Union plus 10 years, but that means they're not going to spend the next 15, 20 years building an infrastructure that they think they won't need anymore in 20 to 30 years. So this is a limited partnership, but Narendra is absolutely right to point out that Russia being the commodity supply base for China, it has some implications, especially for the Indo-Pacific region, that I think, especially democracies in those areas, and there are many, will look at with concern.
Just to follow up quickly, Henning, on that, as you said, the language out of the Uzbekistan meeting last week vis-a-vis Russians acknowledging Chinese concerns, and yet coming a week later, there is a sense of escalation in the narrative in the conflict, in the war in Ukraine, and the actions thereafter, conscription, talk about nuclear weapons. How do you square that circle vis-a-vis that dynamic?
Yeah, it's a good point. So the way we see it at the moment is, if you mobilize 300,000 conscripts, that's not going to be a strong offensive force that you're building there. So we reckon there's probably a link between mobilizing these forces, calling the referendums, then probably annexing those areas and trying to fortify the position there over the coming winter. And then how we get through, and what happens after that, we're not in Putin's head, I'm afraid. We don't really know. But we do think this is an effort, rather than restarting an offensive momentum, is actually to cement the remaining gains that they have, because there were signs that the Russian forces on the front were doing exceptionally badly, and there were some signs of collapse there. So we think it is an effort to cement control in the areas where referendums are now taking place and or being staged, and then they're probably going to be annexed and being integrated into Russia and then stabilized with those fortresses, because then you can use conscripts in areas that are considered Russia. You are allowed to, by Russian constitution, use Russian soldiers and conscripts, which normally under normal legal circumstances, you can't use those soldiers in foreign territory. So there's a bit of a legal twist here as well. But the conflict is still escalating.
That is the sort of narrative of the week, perhaps, amongst many others. Oil trading now down 1.5% this morning. The big news coming this week inevitably will be the outcome of those referendum, quote unquote, in eastern Ukraine, where the dominoes there fall from that escalation, which, putting everything else aside, one would have to think could bring a bullish factor back into the oil market. It could bring an upward draft, one or two headlines on the back of the referendum results. And, that is the security of supply concern back into the market. Probably doesn't change all of the factors at play, as Omar indicated, but ultimately oil prices could be volatile this week around that point alone. Thank you, everybody. Omar Najia, as always, rock star. Henning and Narendra, really appreciate your insights today. We'll see where the week goes. 10:30 every morning UAE time. We'll take a bit of a pop at analyzing the direction of travel. Have a great day.